In on the markets, our business editor Ticky Fullerton standing by, and the market on a tear today, Ticky, despite the GDP numbers.
Well, that is absolutely correct, Kieran. Yes, the market decided that it was going one way, and actually, if you look at the intraday trading, it didn't even blink at 11:30 when the GDP figures came out. Those figures, of course, were, higher or lower, whichever way you look at it, than expected. We were expecting for the second quarter GDP to have shrunk by 6%. It, in fact, shrank by 7%. Quite a big contraction then. But I think as far as the market was concerned, this was rear-view mirror stuff. The market is much more interested in what will be happening in this current quarter and the quarter after that. You can see there that actually where these falls occurred, and very much in terms of the sort of discretionary spending area. You can see that our overall exports, for example, and government spending was quite strong, but in terms of business investment and consumer investment and confidence, right down there, and particularly in Victoria and New South Wales, of course. Now, going forward to the next quarter, or the one that we're currently in, we've got the Melbourne lockdown, which actually wasn't a part of this, wasn't factored into, of course, this the June quarter numbers. So we've got that to deal with. But on the other hand, that'll be offset by the economy starting to get back together in other parts of Australia. So markets much more interested in that, and of course the budget in October.
And Ticky, quite a bit going on in the wealth management space and financial advice, AMP and IOOF.
Well, exactly. I mean, IOOF, of course, had their results, and they announced on Monday that also they would be taking MLC off the National Australia Bank. Now, this is in addition to another financial advisory business that they took off ANZ earlier. And Renato Mota, the chief executive, is trying to basically consolidate these huge financial advisory businesses and wealth businesses put together. I mean, at one level, they're now more funds under management than or as big as Aussie Super. So this is a very big organisation now, and his big challenge is to bring all that together. He did a very big capital raising today, got that away for over $700 million, and as a result, part of it was a rights issue. The share price has fallen 15% today. Part of that issue was discounted, which is sort of part of the reason. In the other camp, though, AMP, the new chairman, Deborah Hazelton, has grabbed the bull by the horns after all the drama at AMP, is having a full review of every asset the company has with a couple of Schmick advisors. And so they're looking at potentially selling some of these assets. Now, whether that might include financial advice, who knows? But I think Renato Mota has enough to chew on at the moment.
Ticky, talk to you soon. Thanks.